All righty, folks, we've got the stock market hitting all-time highs. We have the bond market going down and going up like a yo-yo. We've got perhaps more negative divergence. What the heck is going on in the stock market? I don't know where you go, but where I go is to Mr. Dan Bird. What's going on, buddy?
Not much. Things are good.
Last week was wild.
Wild week, yes. Kind of
Yeah,
thought it would. There are a lot of things reported last week. This week's kind of quiet coming up, but
yes, yeah,
last
pretty
week was
quiet.
lots of stuff going on.
You spend a lot of time watching the market, obviously.
Yeah. Mm-hmm.
I spend a lot of time watching the bond market, and man, the 10-year went on a rip Wednesday and a bounce Friday. That was wild to watch.
Well, look at it. It went down Wednesday and Thursday,
Yeah, and then up
and actually Tuesday, Wednesday, and Thursday, 3 days in a row it went down.
Yeah, so pretty wild week.
It'll be interesting when we look at that chart. I don't know if you remember what I said a few weeks ago about the 10-year. I said it's going to bounce around in this range.
Yeah, I remember.
we're gonna actually look at that range.
Well, let's get into it. Last week was a wild ride for the markets, for some of the big tech, right? The Magnificent Seven, Meta, Tesla, for example. Also,
Amazon,
Microsoft,
did well.
Apple. So
right.
Let's get into it. Why don't you take it over and show us what you're looking at?
Alrighty. Let me share my screen and share my website if anyone's interested. I just finished my newsletter this morning. I've been a little late because we've got company in, so
yeah,
they've been hampering my wife is like, they're like, aren't you retired? My wife is like, he's not retired.
He's not retired.
So anyway, if you want my newsletter, just go to breakpointtrading.net and it's right here. Some of the things I'm going to talk about in the next section are in the newsletter this week also. Which is basically this right here, the Santa Rally and the January effect. But if you go to the newsletter, there's some cartoons there. Investors Business Daily just raised their status. So this is basically the highest level. Exposure 80 to 100%. S&P Dow climbed to record highs. NASDAQ didn't quite get back to record highs, but the S&P and the Dow did.
Okay.
And here's the calendar for last week. So
can you make that a little bit bigger? I'm sorry.
Make
the font a little bit bigger. It's all right.
There
we go. Now my old eyes can see it.
Okay. So you can see on the Fed meeting was the big one. Right. Interest rates stayed stable. I want to apologize to everyone because on my midweek update, I said the Fed meeting normally is 2 days. And I knew it started on the 31st, and I thought it was 2 days this time, but it wasn't. It was only 1 day this time.
Okay.
So I thought that they would do the rate decision on the 1st instead of the 31st.
Yeah, it's okay. Mistakes happen.
Just my mistake. Anyway, they kept it stable, as everyone expected. I thought there's an outside chance they could raise because everything was coming in so strong. I mean, jobs numbers the next day came in incredibly strong. That's right down here, actually. So forecast was 187. Last month was 333. Forecast was 187. Came in at 353. Even a little higher than last month.
Yep.
And the unemployment rate stayed the same, 3.7.
Yeah, 3 months in a row.
3 months in a row, and that's the economy is really strong. GDP is strong. CPI actually went up last time, but it's going to come down this month, February. So, overall, the economy is in a really good position. It's very strong right now. So the Fed held, and I think the disappointment for the market was that they said we're not going to drop in March,
right?
Which I didn't think they would. Anyway, I've always been saying May or June. It's when they'll start cutting. And that's probably when they will start cutting. But it won't be March.
Yeah.
So
I don't know. Have you taken a look at Trueflation? I mean, Trueflation, again, is that website that's updating what actual inflation is, and it's under 2% now. I don't know if you've seen it.
No, I haven't looked at that, but that's fine. It's, the Fed's going to go by all the numbers, not just one number.
True. No, I think it's just a sign that again, 60% of inflation inside of CPI core the last 4 months has been shelter, and that's just mathematically going to roll over.
Right.
Coming.
Yeah. There's no question that inflation is coming down.
Yep.
Let me rephrase that, because I did a session yesterday here in my community which is growing and growing because people are hearing about it. And I said, people talk about inflation coming down. Inflation is not coming down. The rate of increase is coming down.
The rate of change is coming down. It's called disinflation, not deflation.
Right. But inflation is not coming down. Inflation is still going up.
Correct.
For inflation to come down, we have to have deflation.
Correct.
So, it's continually going up. So the last, 2 years, inflation has been rising. It just so happens that, yes, we're back at 2% or less than 2%, but that's just the rate of change. Inflation is still really high.
Yeah, absolutely. Okay.
I mean, deflation would actually be a good thing, at least temporarily.
Yeah, you want temporarily being the key.
Temporarily, you don't want it to take hold, but and that's what's happening in China right now. They're in a deflationary period right now, so we'll have to see if that's going to be temporary there, which people think that it will be, but it remains to be seen. If it's not, if it really starts to feed on itself and stays deflated for an extended period, that could start spilling over to the rest of the world.
Yeah, deflation in China is one of those black swans we have to look at. There's rumors that they're going to take a bazooka to the economy of something like $270 billion. They're starting to buy stocks. So the Chinese central government doesn't want deflation. It causes bad things.
Right.
So we'll see. Yeah. Okay.
Yeah. I don't know. I cringe a little bit when somebody says one of those black swan events.
Okay.
If you're calling a particular thing a black swan event, then by definition it is not a black swan event.
Right. That's true. That's fair.
Right. You can say there will be a black swan event, but you can't specify what it is, because black swan by definition means you don't know what it is.
Right. Correct. That's fair.
So it will be, it's definitely something to keep an eye on. The next week is kind of light. We've got some manufacturing numbers coming in, jobless claims. Interesting, Powell speaks today. In fact, he hasn't spoken yet. So this is what, 7 o'clock?
Yeah,
tonight. I don't know where he's speaking, but that'll be interesting to see if that has any effect on things. So that's the basically the calendar of what happened. Let me actually look at some charts, because I want to talk about the market and some of the divergences that I'm still seeing. So if we go to the home page over here, by the way, the newsletter is free. If you want it, you don't need to register your email, but if you want to be reminded that it's available, then you should at least register your email. Just clicking this button right here and you'll get the free newsletter. The other things on this page are also free. This is the main page. The books page is free, but a lot of these other ones, there is a subscription required. It's only $99. So there's a lot of content for that price. But if we look at the S&P right here, here's what it looks like. All-time high. S&P again made another all-time high. So this line is the all-time high from 2021. So we're above that. And this is the divergence, one of the divergences that I talked about. I've talked about it for a while, but it still exists. It's still there. So the market continues to go higher, but the momentum indicators are going lower. So it's going higher on less and less momentum. All right, which doesn't mean that it's going to crash or anything. It could continue to keep going higher. But at some point, this just means it's running out of steam. At some point, it will have to roll over or at least go sideways. It will have to stop making new highs. At a minimum, have to go sideways. And maybe it will come back to this old all-time high right here. But you can see we're at 49.58. I think it is on a tear and determined to make 5,000. So we could hit 5,000 next week.
Okay.
And then once it does, markets are funny when they get close to those round numbers.
Mhm.
So for some reason, people just want it to get to that round number. People buy to get it up there, just to say, well, yes, we did it. It's almost like crossing a finish line on a sprint, right? And then once it does, everything rolls over and it pulls back again. So one good thing is that we've set a really nice support line right here with this old high around 4,800.
Okay.
So we could get to 5,000 and then pull back 200 points back to 4,800. That would be a natural, normal, healthy thing for the market to do. In fact, it's right at the 21-day moving average. So that would not surprise me at all if that happened. But these divergences are giving a clue underneath on the market of what's going on. If I look at VectorVest, and I put this in the newsletter as well, this is the market timing graph for VectorVest. You can see it's basically just been going sideways. Now, VectorVest tracks everything in the market. So 9,000 stocks. So that means ETFs, leverage ETFs, everything, gold, everything in the market. So it's sort of like an all-inclusive indicator. But as this has gone sideways, even though it has made a little bit of a new high right here, where that H is, but as it's gone sideways, the market timing indicator, this one here, has gone down. The buy-sell ratio, which is really the important one, it's the number of buys versus the number of sells. That one has definitely gone down. And the RT, which is the relative timing or the short-term momentum of the market, that's also gone down. So while the market has gone sideways, these are all going down. Again, that's negative divergence. So the best way to think about this is with the buy-sell ratio, the market is holding up. If you look at the price up here, the market is holding in there where it's at, but it's doing so with fewer buys than before. All right, so kind of running out of steam. I mean, that could still continue for a while, but I still think that 5,000 level is really important. If we look at the NASDAQ did not quite make a new high. Last week, you can see it's pretty close to it, though. But again, you can see the price going up and the momentum indicators going down.
Yep.
So I look for these, especially when we get near new highs, whenever the market is just chugging higher day after day. This is what I start looking for. Is the momentum starting to run out of steam? Because it gives you a clue of when the market might start to roll over. Now, again, as I said, this could continue for a while. This could go down, make another one back up again, and not as high as the previous one, and it could do it again. So it's not telling you that it's going to crash on Monday. It's just saying that it's running out of steam. Be careful. Or if you want to take new positions, you might make sense to wait a little bit for a pullback to take a new position, but don't necessarily sell the positions you have, right? Just maintain what you've got. So some important things to watch. The other one that's really important, and I put this one in the very end of the newsletter, which I hope people get that far, but it's pretty important. The NASDAQ Mullen oscillator. The Mullen oscillator tracks the number of advancers versus the number of decliners. And when the oscillator is above zero, that means there are more advancing stocks than there are declining stocks. And when it's below zero, or the red areas here, that means there are more declining stocks than there are advancing stocks. Okay, so pretty simple. And it's good to know when it crosses the zero line, because that's usually when you get a trend change. But this is a really good one for divergences, because they can be pretty accurate. So if you look back here between August and October, when the market was continually going down, and went down and bounced, but didn't get higher than before, went down, bounced, but didn't get higher than before. So it's just a downtrend all the way. But every time it would go down to these lows, and each low was lower than the previous low, it was doing so with fewer decliners.
Oh, interesting.
If you look at the oscillator at the top. So yeah, it kept making new lows, but it did so with fewer and fewer stocks declining. Or you could say more stocks advancing even as it was making new lows. And then finally it crossed the zero line and went up here. And that's when, you know, in October, I mean, this kind of gave you the warning early. The real warning was the second time, because you don't know until you get the second one, right?
Yep.
You know, this low here, this one could have been lower too. You don't know that until you actually get there. So in this low here, when this one was not lower, that's when you knew there was a positive divergence. So it wasn't until sometime in late September, early October, that your antenna should have gone up saying, it looks like this downtrend may be coming to an end. Now, the divergence, it gave you the indication it might be ending, but it didn't actually end for another month.
Right.
And that's where we could be right now. Even though we've got those negative divergences, it doesn't mean it's going to happen right away. But, you know, sometime in the next month, then I think it will. So the other thing to look at is whenever this thing makes roughly 100-point move in a very short time frame. That's called a breadth thrust.
Huh.
So this one went from -30 up to 50 right here. So that's almost 80 points. So that was a pretty big thrust. In fact, it's this one move right here, that thrust right there. You can see if I put some vertical lines in here to make it clear. Right there is where it crossed, but here's where it started.
Yep.
So the thrust started right there, and thrust ended right there. So there's the big thrust in about a 2-week time frame, right? And you can see what the market was doing during that time. Right. Now, as the market was coming down, it hit a low, it went up but not as high, it hit a lower low, went up but not as high, it hit a lower low. But do we know at this point if it's going to go up and not make another higher high and then come down and make another lower low? No, we don't know that yet, right? But this positive breadth thrust right here tells us that there are more advancers in a wider space in the market during this period. So that should have given us pretty good confidence that it wasn't going to do this again, that it wasn't going to come back again. So there's the big positive thrust. Right. Now, if we look at this one over here, between there and there, there's a huge negative thrust, right? During a time when the market was going higher. Okay, it came down right here, but then it started back up again. But the thrust was to the downside. So the market was telling us that it not only are there more decliners during this period, but there's a wider group of stocks declining with that breadth thrust. Right. So we made a new high here, but this was still down below zero. And we came down right here, and it never really, just very briefly, it touched the zero line, even as it was making new highs, and it started back up again, but this is still going down. So again, this is a negative divergence. This one's a positive divergence, meaning the downtrend was ending. This one's a negative divergence, meaning the uptrend is ending. Now, this one took, roughly a month to actually occur. So this one could still have a month left before it occurs. Okay. And then there's another negative divergence down here on the bullish percent index. This is just the number of bullish stocks versus bearish stocks. And as the market goes higher, this should go higher too, like right through this period. Right? From the bottom in October, this just kept going up. Well, the bullish percent kept going up too. That's what it should do. Yep. But when the market goes higher and this goes lower, it's a negative divergence. So those are things underneath the market that we should pay attention to and understand what happens with those. Now, let me shut this. Let me close that. I'm just gonna say no. And let's go back to if you remember last week when I talked about the election year, and this is from Tom Bowley. He put together this chart going back to 1950, all of the averages of just election years. Just the years when there was an election did not matter whether it was a Democrat won or a Republican won, did not make any difference.
Okay.
It's going back to 1950, what normally happens. And keep this in mind with what we just talked about, with those negative divergences. Okay. So going back to 1950, this is what the market normally does. This is the average over that period. We are right here in the beginning of February, right about here. You can see that. I don't know if I can make it clear.
I see it.
All right, so right here, this is where we are right now.
Okay.
So we could still have a little bit more to go up. Like I was saying, it doesn't happen right away. That negative divergence could take, 2 or 3 weeks to play out. And according to this, that's about the time frame that it would play out. But then around the middle or end of February, we start getting a sell-off. And then in March marks the low of the year.
Okay.
All right. So like I said before, if you're ready for new positions, this might not be the time to do that. Or I would say it would be a very risky time to do that. But if you do want to enter new positions sometime in March, if we do go down and make these lows in this time frame, that's probably going to be the low of the year. The year will end higher. And I'll show you why that's going to happen in the next session that we do. We talk about the January effect. But March will probably be the low. So that's the thing to watch out for. There's another right through here. The market hates indecision, and this is right around the convention and the election. Yeah. So the market probably normally, back to 1950, normally sells off right after the convention, just before the election. And then right after the election, when it gets, there's no more uncertainty, regardless of who gets elected, the market usually takes off and ends higher for the year. So let's take a look at something that you asked about, which was some of the Magnificent Seven stocks. And the first one I want to start with is one that I showed a couple of weeks ago. We'll look at Meta compared to Google. If you remember a couple of weeks ago, I did this. Neither one had reported at that time.
Yep.
So this big spike here in Meta's on the left, and the big drop in Google on the right. This was after we talked about this. So this is an intraday chart. So this, we talked, way before this ever happened.
Yep.
But on the daily chart, what I said at the time was they both look very similar. And if you look at the daily, how Meta was climbing right here, and you look at Google, how Google was climbing, I said they both look very much alike, right?
Yep.
However, when we look at the weekly, and I added in the comparison with their industry group or their peers, and both of these stocks happen to be in the same industry group. They're both in the internet space. And I said at the time, it looks to me like Meta, if you look at Meta versus its peers, it's outperforming its peers.
Yep.
Down here. And I said, well, if you look at Google, Google is underperforming its peers. I said, based on just this right here, I predict that Meta is going to have great earnings and Google will not.
Got that one.
And you can see up here what happened with the price. Meta did great, Google not so great. So this can be very powerful, especially when you start comparing the relative strength within its own industry.
Right.
And start comparing stocks that way, especially before earnings, because all of the analysts, they talk to these companies before earnings, but about 3 weeks before they release them, there's a quiet period and they can't talk anymore.
Right.
But this gives you the indication under the covers of what those analysts are doing ahead of time. So
I like it.
So that's interesting. So Tesla has just been having a terrible time. Tesla just keeps going down, hasn't shown any sense of recovery, although it looks like it's trying to make a bottom right here, right now. So it's just kind of bouncing along sideways between 180 and 195, roughly.
Okay.
So at some point, Tesla might start to recover, but I mean, it doesn't look like a great chart to me at this point. So it's one that I probably would wait on. On my website, by the way, I've got all the Magnificent Seven right here, and I update this every day, and it shows you an early warning system over here. So Google actually has an early warning, and Meta has a bullish. Google has a bear early warning. Meta has a bull early warning. Tesla is a neutral right now, but it's got bears all across the board. Short term, medium term, long term, bearish across the board. Apple too, by the way, has a early warning bear and short term and medium term bears across the board. So this right here gives you an early sense. If you want to just play the Magnificent Seven and that's it, then just wait for this early warning to turn bullish, which it just did for Nvidia, Microsoft, and Meta. And it has been for Amazon. Amazon had great earnings as well. You know, that shows you when to get in. And when it turns bearish, it shows you when to get out or go short, perhaps. So that's interesting on the Magnificent Seven and what they're doing. If we look at Amazon, Amazon also had a great earnings. They had a great day on Friday as well. And most of these big mega stocks are the ones that drove the market last week. Here's Apple. Apple's been, heading down. So again, that early warning showed you that it was a bear. Early warning is when this red bar appears. So we've got green, green, green. Let me make this a little bigger. So green, 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 blue, blue, and then we've got a red one. So as soon as that red bar appeared, it got an early warning sell bear signal. That's how it works. Here's Tesla. So Tesla's a neutral because it's blue. And it's coming off of a red, so neutral up signal. So it could be ready to start moving up. And we can look at Apple and AMD. There's a green one, so it just got a bull signal. There's Amazon, big gap up for Amazon. Google, again, Google doesn't look too good after their earnings. Meta looks great, big gap up for Meta. Microsoft also did pretty well, but I mean, it didn't really gap up. It didn't break out, didn't make new highs, but still looks pretty good. Netflix, that's a neutral, but it's just kind of going sideways right now after a nice run up. So all of these mega caps, there's Nvidia just doesn't stop. Just keeps making new highs. I feel sorry for people that are trying to short Nvidia.
Yeah, that's got to be getting old.
People that don't understand technical analysis and say I just think it's too high. It's too high priced. I just think it has to be too high priced at over $650. You remember we were talking about it back here before it went over 500.
Oh, we talked about it before it was over 400 because I bought some.
Right. This is just a month ago. It's gone from 500 to 650. I mean, I think it's going to keep going. If it gets to 750, I think they're going to announce a split.
A split, yeah. Split's coming.
Right. Yeah, I think a split's probably coming. Oracle's had a nice run actually recently. So
very cool.
SMCI is just amazing as well. Just keeps going up 600. It's almost the price of Nvidia, which now that one to me doesn't make a lot of sense. This is truly a momentum stock. It doesn't have nearly the kind of moat that Nvidia has, but it's a small cap and a low float. So this is one that's pushed just purely. I mean, they have a good business. So they are in the AI space and they provide the hardware equipment to run NVIDIA chips on. But this one to me is more of a momentum play. So at some point when that momentum runs out, it could start crashing just as fast as it goes up. But right now it's doing really well. And then Tesla, and that's it. So those are all the Magnificent Seven stocks. Anything else you want to look at?
No, I think at this point we should, we've teased the Santa Claus rally or January effect. So we will get into video number 2. Again, go to his website, breakpointtrading.net, get the free newsletter. And if you want to get the reminder, sign up, no charge, just give me your email. Dan, you're amazing.
And I will be there. I'll be there at your event in 2 weeks from today. I think I actually at this time I'll be speaking in 2 weeks.
That's going to be a lot of fun. I will admit I'm a little bit nervous, but that's probably a good thing.
You
Thanks,
should
buddy.
be. You should be nervous. I mean, the thing that really makes you nervous when you have a party like that is, will anyone show up? But you know people are going to show up. So you're just worried that it's going to be the quality that you expect.
Exactly. Thanks,
Right.
buddy.
All right. Take care.